What steps can somebody take today in the current financial situation that we're in to improve their finances in the midst of this chaotic economy?
So there's two steps to that. The two things you got to do are one, you got to be financially educated, and second, you got to be prepared. And those are the two things I would recommend anybody focus on, especially during this time when things are still kind of okay. I mean, I know it feels crazy, but things are still relatively okay. And this is where it becomes so crucial to one, improve and invest in your financial education, and second, start being prepared. Now, what does that mean? Well, financial education means, well, for one, understanding what's happening and understanding where the opportunities are. Because there's a lot of craziness out there. Be more financially educated in one, understanding what's happening, reading through the lines. So, if I could break that down very quickly, we have an economic slowdown that began because we had a lot of inflation. The prices of everything rose. So you have rent prices rising, gas prices rising, grocery prices rising. You have travel costs rising. The price of everything went up. And so what happened was people were spending so much money on their basic necessities that they had less money to spend other places. You spend so much money on your rent, you can't go to Gucci, you can't go to Chipotle, you can't go to Amazon and spend as much money. This started to trigger an economic slowdown. Well, at the same time, the second factor was the Federal Reserve Bank said, oh no, our inflation is so high, we need to start fighting it. We need to start bringing it down. Third, this inflation fight means that the Federal Reserve Bank is raising interest rates. Well, this fight on inflation also slows down the economy. So you have the inflation, which is slowing the economy, and then you have the fight on inflation, which is further slowing the economy. Because as you raise interest rates, your mortgage cost goes up. It becomes more difficult for you to buy a home. Your interest rate on a car payment goes up. It becomes more difficult to buy a car. It becomes more expensive to start or operate a business. And so all debt costs go up, making it more difficult to survive. And now on top of that, number four is you have a slowing global economy. China is seeing a crazy property crisis over there. The UK economy is imploding. I mean, this is crazy stuff happening over there. The prime minister just resigned after 45 days in office. Think about that. A newly elected prime minister had new plans to turn the economy around. A month and a half later, leaves. And, there's just another whole bunch of crazy stuff happening in the UK. Their pension funds almost went insolvent. They almost went bust. Their central bank had to come in and bail them out. So the UK is struggling. Now the Canadian property market, it just came out recently that property prices in Canada are falling faster than they did in 2008. So you have all this craziness happening around the world, which will eventually trickle down to the United States. And it can also give you kind of a foreshadow of things that are potential that could happen here, potentially happen here. So you have all of these things happening, which indicate that there's going to be economic pain ahead. And this is where now the second part of financial education is understanding how to use your money. Because most people, myself included, were never taught a thing about money. I was told to be a doctor. My parents are immigrants from a state in India called Punjab, and I had that traditional Indian household where I had two options, either become a doctor or be a failure. I chose the second. No, but I was going to go into school to be a doctor. I was in pre-med, and I started diving into entrepreneurship and financial education, and I really liked it. I mean, it was something that I really loved, but my parents never approved of it. So it was something that I did on the side. Like I started investing in real estate when I was in college, and I didn't know any real estate investors. I had no idea what real estate investing was. I started earning some money in college from my event planning company that I started, which I also ran in secret. And I used that money to start investing in real estate. But before I did, I told my dad, Dad, I want to start investing in real estate. And his response was, you're stupid, go study. Worry about the stuff after you become a doctor. And so, my parents didn't really have much financial education. I didn't grow up with any financial education. I had to figure it out myself. And that's how I learned and kind of dove into this whole financial education side. And then when they said, or when they realized that I wasn't going to be a doctor, they said you have to at least become an attorney. And I became an attorney, but I never worked a day as an attorney. I love my parents to death. They are some of my biggest supporters now. But what I'm trying to get at is financial education isn't something that you learn in school. I went through a lot of schooling and never once learned a thing about investing. never once learned a thing about wealth, never once learned a thing about passive income, never once learned a thing about what it means to create any sort of financial freedom. But these are things that are very important, and it requires that financial education of you going out and learning how to use your money the right way. And there's tons of videos on my channel, Minority Mindset, that go over that. But this is all just about learning how do you create a budget? How do you start investing? Where do you invest? Is it the stock market? Is it real estate? Are you going to build your own business? And knowing now, based off of what's happening in the world, where can you find the best opportunities? So that's financial education. That's what I do. That's what my companies do. I have a financial newsletter company and an entrepreneur newsletter company. It's called briefs.co, where we publish free newsletters every day to help entrepreneurs with their business briefs and to help investors with our market briefs be more aware of what's happening in the markets. That way you can make better decisions with your money, and it's free. Then on the prepared side, it's, okay, so now you're investing in your financial education. What do you do and how do you take advantage of opportunities? Well, in order to do that, you need to have access to capital or cash. And that means now when things are okay, put aside more cash. So spend less and or earn more money. That way you have margin. So when things go wrong, you have something, cash, to use to actually buy assets at a discounted price. Because when those bad things happen, most people get scared, they run away, and they don't have the ability to buy. And that's where you want to start thinking a little bit differently than the majority of people, why I call it the minority mindset, and be prepared beforehand. That way you can actually take advantage of the opportunities that nobody else is buying. And that's where the real wealth is built. And that's why some people can become incredibly wealthy when you see market crashes and recessions, but other people lose everything. And 10 years from now, you are going to see a whole new wave of millionaires because of what happens in the next few years. And it's going to require you to be financially educated and prepared to be one of the people that can come out of whatever's coming next a financial winner, that we don't have to be one of the people that gets hurt because of what happens.
Right. I love that answer. And I love how you talked about the importance of like financial education, because it's so important, and also like being prepared and being able to take care of these current opportunities. I think one of the things that a lot of people struggle with is their inability to stop the bleeding. They're continuing to not budget the right way. They're living paycheck to paycheck and continuing to go out and buy the lattes at coffee shops. They're continuing to go eat out all the time. What are a few things that people can do like right now to help prepare them financially to be in a better position, like so that they can take advantage of some of these opportunities that you're talking about?
The first thing that I would recommend is take a piece of paper, and on the top, and this could be a Google Sheet, Excel sheet, doesn't matter, but on the first line, write down your income and all of your income sources. Then a couple lines below that, I want you to write your expenses over the last month and write down every expense. So take your credit card statement, your debit card statement, your bank account statements, and write down every line item, because you need to know where your money is going. Like in business, what they say is, if you can't see it, you can't optimize it. If you can't track it, you can't improve it. And that's what you need to do here, is you got to start tracking your money. Immediately when you do that, without any sort of coaching on my end or financial education on my end, you're going to say, holy moly, how much money did I spend here? And you're going to immediately make some financial changes. You're going to find some subscriptions that you didn't know that you had, and you might find some bills that you could potentially renegotiate and lower. Then after you do that, the next thing you want to do is create a system for your money. Meaning, anytime you get paid, what's going to happen with that dollar? And you need to know this before a dollar hits your bank account. And one of the simplest things that you can do is follow something like my 75, 15, 10 plan, which says for every dollar that you earn from here on out, 75 cents is the maximum you spend, 15 cents is the minimum that you're investing, and 10 cents are the minimum that you're saving. Now, all of a sudden, it doesn't matter how much money you're making, you're always paying yourself first. And when I say paying yourself first, I mean you're investing your money, because your wealth, true wealth, is built through your investments. It's not built through your savings, although most of us are taught that you need to save your money to wealth. That's what I was always told. But you can never outsave inflation, because if your bank account is paying you a lower interest rate than what inflation is, your savings are effectively making you poorer each and every day. And your spending isn't going to make you rich. It might make you look rich. You got a BMW, you got the nice stuff, you got all the expensive designer clothes, but it's not going to make you actually rich. your assets, your investments are what make you actually rich. And what's kind of ironic is that in order for you to actually become rich, you got to sacrifice some of the things that make you look rich. And so you got to make that decision of, do you actually want to be rich or do you just want to look rich? If you want to actually be rich, you got to invest more money. And then when it comes to spending, the last thing would be knowing what you can afford. Because we live in a consumerism culture where if you have $100 in your bank account or your pocket, most people feel like they can afford a $100 pair of shoes. But I would disagree. I like to follow something called a rule of five when it comes to liabilities, especially things that I don't need, which says if I can't buy five of them, I can't afford one of them. Where now you're understanding how to use your money smartly and you don't just blow your money because you got it.
Right. And I like how you hinted at some of these like misconceptions or lies you've been taught about money. And there's so much information out there on money, on how to invest, on saving, on budgeting. Like, what are like maybe two or three like lies out there in the financial education department that really, really upset you, and also that you believe are causing, people, they're creating this block for people to build wealth?
So I didn't grow up with any sort of financial education. I want to say that again. Like before college, I had no idea what the word dividend meant. I didn't understand the concept of passive income. I didn't hear that word until I read a book about business and money when I was like 17 or 18 years old. Like I had no idea what investing was or anything related to financial education. I was always told and under the impression that if I studied hard in school, that means I could get good grades. If I could get good grades, I'd be able to get a good job. If I could get a good job, I'll be able to make a bigger salary. And that is the route to becoming successful. Better grades, bigger salary, more success. I thought it was linearly correlated where if I got better grades, I'd make more money. And when I was studying to get into medical school, I was studying for the MCAT. I was losing my mind because I was in the library like 12 to 14 hours a day. And I would take breaks every few hours and then I would like try to do something else. And I was interested in entrepreneurship. I had already read a few business books and entrepreneurial books. And I remember going onto Google and I searched the richest people in America. And I still remember this because I was on the third floor of the library. And I pulled up like a random, I think it was a Forbes article. And it had listed all these different entrepreneurs on there. And I was like, this is so weird. Like you have all these entrepreneurs who are the richest people in America and the world, but none of them went down that traditional route of just working a job and climbing the corporate ladder. They all did something completely different. And that's when I realized that there's a difference between grades and how wealthy you become. See, we're taught in school to go to school, get good grades, and get a good job, and then climb the corporate ladder. But wealthy people are not working to climb the corporate ladder. They're working to own the corporate ladder. And that was the first concept that I had no idea that you could do, that you could invest your money to actually own a piece of the equity, meaning ownership in the means of production, whether it's in a business, whether it's in a stock, whether it's in real estate. And that's where the real wealth is built. And that brought me to the second aspect, which is understanding the way that our financial system works. See, we all know that the United States is a capitalist system, but most of us have no idea what that actually means. That word elicits a lot of emotion. People get angry or they love it. And I really never understood what that term meant. And as I became more financially educated, I realized that it's not really an emotional term. It is what it is. Like America is a capitalist system. And if you want to win in a capitalist system financially, you've got to understand the way the system works. And in a capitalist system, there are two ways that you can make money. You can make money from your labor, or you can make money from your capital. And the most wealth in a capitalist system is built through your capital, not your labor. What does that mean? Well, you go to work every single day, like we're taught to do in school. That's making money from your labor. You go to work, you get a paycheck. Well, the real wealth is built through your capital, which means you take a piece of the check that you get from your labor, from your job, and then you want to put that money to work, meaning you take your income, which is your capital. Capital means money or dollars. And then you want to invest that into something. Equity. Equity means ownership. And this could be ownership in a stock, which gives you ownership in a company. Like if you invest in the Amazon stock, you own a piece of the Amazon corporation. You are literally one of the owners of Amazon, and you get to share in the profits when Amazon makes money. And now what happens? Well, if you own a piece of the company, now you have all the people at Amazon working for you, and they're working to grow the value of the company. They're working to grow the profits, because when the profits grow, the value of the company grows. And so that's a way for you to put your money to work without you actually working. And it will completely change the way you think when you understand the way the system works, because now you're going to be working to put your capital to work instead of just your labor, your time, your effort. Because there's a limit to how many hours you can work. There's a limit to how much effort you can put in, but there's no limit to how much your money can do. And that's where the real wealth is built. And that's why the wealthiest people in the world are not working to increase their hourly wage. They're working to increase how much capital they can put to work, because that's limitless. And you can scale that to the moon or to the sun or to Mars or whatever galaxy people are talking about nowadays, but you can't scale your labor that way.
But wouldn't you say though that like people who are making like 50, 60, 70, $80,000 a year or whatever, and they only can invest like a certain amount of money because the rest is taken up by expenses. Maybe they have kids, maybe they're trying to save for college. So wouldn't the goal be to increase the amount of money they make each year?
Yeah, it's a two-pronged approach. The first thing you have to do is you got to know how to put your money to work. That means, you make 40, 30, $50,000 a year. You got to learn and understand how to put aside 15% and start investing that. Once you know how to live below your means, now is where things get fun. Now we start working on increasing the income. Because what ends up happening to the majority of people in that situation is you're making 40, 50 grand a year, and now you're working to put aside 15% of your income. And you're like, wow, I love this investing thing. I like this idea of building wealth. You're playing with compound interest calculators. You're putting the money in and you're looking at it. Oh my God, in 30 years, this is how much money I'm going to have. And now you're like, I want to accelerate my path to wealth, which is great. And then what most people do is they're going to say, well, how about this? How about I cut out another 5% of my income and I squeeze some more pennies out of my pie? And then you try to do another 3%. And now what you're doing is you're trying to squeeze every penny out of your pie, which is good to an extent, but you're never going to be able to see the real efforts of scale unless you start thinking a little bit bigger. You adopt a growth mindset, and now you say, well, what if I, instead of just putting aside $10,000 a year out of my 50 grand, I work to earn $500,000 a year. And if I can earn $500,000 a year, now instead of putting aside 10 grand, I can put aside 100 grand. Well, you're living off of the same percentage of your income. It's just a much bigger dollar amount. And most times when I say that, you're going to say, but Jaspreet, how in the world is my boss going to give me a raise from 50 grand to 500 grand? And you're right, your boss probably is not going to give you a raise next month, bumping you up 10x. But this is where, again, is developing that growth mindset. And that means one, believing that it's possible for you. Because if you don't believe it's possible, I guarantee it's not going to be possible for you. Second, when you believe it's possible, that's when you start investing in your own education. And that doesn't mean you have to go out and spend thousands of dollars right now, but that means maybe you start watching YouTube videos on how to increase your income, how to start a side business, how to start your own company, how to start a side hustle, how to start doing other things to create more income, or how to get a raise, or how to get a different certification. You're going to start investing your time into learning more about your own income. Then you might start investing some dollars. Maybe you buy a book or two, or 10, or 20. If you go out and buy 20 of the top selling business books out there, you're going to have enough value to cover what an MBA would at a fraction of the price. If you go to Amazon, you find 20 of the top business books, from sales to marketing to entrepreneurship to growth. You're going to know enough to start a company at a fraction of the price of an MBA.
It all comes back to education, which is at the core of what you talk about. And I know you touched on like the mindset aspect of things, and I think that is what holds people back, is they have these limiting beliefs and toxic thoughts when it comes to money. What would you say are a few mindset shifts that you think every single person like listening to this needs to make so that they can get their mind to a place where they are ready to build wealth and invest for their future?
Number one, be okay being stupid. And it's going to sound really dumb, but it was one of the keys to my success. Because when I was starting off as an entrepreneur, the thing that I kept hearing was, Jaspreet, you are so stupid. Why would you do that? Jaspreet, you are so stupid. Why would you do that? And the reason why they said that was because I had these crazy ideas. I was like, I'm going to start a business. I'm going to invest. I'm going to do this and that. And everybody was like, who are you to say this? Like, I was this broke college kid who had no idea what I was doing, talking all this stuff, but I was stupid enough to believe in myself. And there's a book called The Power of Your Subconscious Mind, which I read recently. And it's kind of funny because I really related to the book because I really talked about the power of dumb belief. Where if you really believe something, even if it's stupid, you're going to find a way to make it work. You just have to really, really, really believe it. And so the first thing is be okay feeling stupid, looking stupid, and being called stupid because you're going to have to start thinking really different and you're going to have to actually believe that. Second, really start investing in your own beliefs. And I wouldn't say I'm the best mindset person out there. There's a ton of people who specialize in like empowering your mindset, changing the way you think. I'm kind of like, look, you got to just think this way. If you really like, you struggle with that, because, I know people who struggle with anxiety, who struggle with depression. And when you struggle with those types of thoughts, you can't just say, okay, be positive, because you can say, be positive, I'm going to be rich, I'm going to be rich. But if you, in the back of your mind, you know that you're just saying this to try to change a mindset, it's not good enough. Like, you have to actually believe it with every cell in your body. And you can't just force yourself to do that. And that's where you want to take another step deeper and start investing first on that mindset side. And there are so many podcasts out there, so many YouTube channels out there that specialize in that mindset side of things. And I would say start there, work on your mental health, work on believing in yourself, and put yourself out of your comfort zone. Do something that you've never done, do something that you never feel like you would do, and go do it. And that could mean going out and taking an acting class, going out and taking a boxing class, getting punched in the mouth, literally. Do something that you were very uncomfortable with, because it'll make you more comfortable doing things that are weird and out of your comfort zone. And this is just practice for you to do things that don't feel normal, because if you're constantly trying to fit in, if you're constantly trying to please other people, when you're constantly trying to do what everybody else does, you are never going to be able to be like what you want to be, because what you imagine is what nobody else has. But if you keep doing what everybody else does, you're going to end up like everybody else. And this is where you really got to start thinking different and doing things differently than the majority of people.
One of the things that I've heard you talk about that I think is going to resonate with my audience is how there's different like sections of our fitness that we need to pay attention to. Obviously, we're talking here a lot about financial fitness. Like, what are the other levels of fitness that people need to pay attention to, and how can focusing on those like enhance people's financial fitness?
There's more to life than money. I focus on the financial education because it's something that I really struggled with, something that really made me emotionally upset. But one of the things that I learned along the way through a lot of painful experiences is that money improves the financial problems in your life. But there are many other parts of your life that you want to understand and you want to really improve and work on as well. That way you can live a fulfilled life. Because if you're rich, but you're miserable, well, what's the point of being rich? And I created something called the quadrifit theory. And what that means is I say that there are 4 aspects of life that you need to be fit in this order. That way you can live a happy and fulfilled life. The first one is being physically fit. Because if you're morbidly obese, if you're on your deathbed, if you are unhealthy, if you can't walk because you're so unhealthy, well, what's the point of having $10 million? And I'm not saying because you have some disabilities. I'm saying like you are not healthy, because we all know that feeling. We've all been really sick before, where all you want to do is get better. And when you're that sick, the only thing on your mind is getting better. And this is where you want to make sure you invest in your physical health. That could mean your nutrition. That could mean your exercise, the way you treat your body. So you want to be physically healthy. Second is mental fitness. If you are miserable, if you are depressed, if you're anxious, if you're unhappy, more money is going to make you more miserable. And this is where you have to understand how to work on your mental health and be honest with yourself. If you can't sit there quietly with your thoughts without feeling stressed and anxious, that's something you want to get looked at. Maybe you talk to a professional, therapist, a psychiatrist. Maybe you look at getting clinical help. Maybe you start by watching YouTube videos and podcasts on how to improve your mental health. And there's so many different ways, you can do this. Some people love meditation, some people hate meditation. I like walking. That's one of my favorite things to do, where I just walk for one of the things I like to do in the mornings is do an hour and a half walk. It's 5 miles. It's, healthy physically, but I love it for mental purposes also because like it's a way for me to clear my mind. And I love being out in nature. I listen to audiobooks and it's a way where I can just be alone and just let my mind wander and think. And that works for me. And everybody's different, and you got to find what's right for you. Third is spiritual health. And this is not necessarily religious, but more of what's your purpose? Why are you on this earth? What's your reason to get up every single morning? And the reason why this becomes so important is because most people, we're not taught financial education, but the extent that we're taught is to work towards retirement. And what's unfortunate is there's a saying, those who retire early die early. Why? It's because when you retire, you stop working and you lose your sense of purpose. And this is where you want to start thinking a little bit earlier about why are you here? What do you want to work for? What are your hobbies? What do you enjoy doing? And if you can make that spiritual purpose part of your financial purpose, well, that's even better, but it doesn't have to be. But you got to start exploring what are you here for and what do you want to do? After that, at the very top is financial fitness. Once you have the bottom three, this is where being financially healthy allows you to live an even more fulfilled life because now you have the money to do more things that allow you to live a more physically fit life, mentally fit life, spiritually fit life. And if you're saying, but Jaspreet, if I had more money, I could buy a better gym membership. I can hire gym coaches and this and that. And yeah, you're right. But guess what? All the money in the world isn't going to make you physically healthy because even if you pay the best gym trainers and you're going out and eating McDonald's every single day, you are undercutting yourself. You have to have the mindset to actually want to be healthy. And then the financial health allows you to amplify every other thing.
So well said. And I think like working on all these pillars of health that you talk about and also having these mindset shifts will help get people prepared for becoming wealthy and building wealth. So, and I know you have a step-by-step process, like from start to finish, on how people can take a look at their finances, do better currently, and then make some simple transitions to improve their financial situation and begin to invest and build wealth. So, if you could walk the audience through that step-by-step process, I think people will really get a lot out of it.
Yeah, so kind of like everything that we discussed, it goes back to the same core elements. And if we break that down a little bit deeper, the first thing you got to do is you got to stop the financial bleeding, like you talked about. And that means now you have credit card debt, you got to pay that off first. Because it doesn't matter if you can get a 7 or 10% return in the stock market. If your credit card is charging you 18%, why are you investing your money? Use that money to pay down the credit card debt first. Because that credit card debt is skinning you alive and it's a guaranteed return. In the stock market, you're hoping to get a 7 to 10% return, but it's also not guaranteed. Along with that, you also want to put aside some cash for savings. Start with at least $2,000 with a goal of saving somewhere between 3 to 12 months worth of expenses. The reason why I say 3 to 12 months is because, well, some of you are going to be young. You don't got any financial responsibilities. You're single. You don't got many expenses. You don't need to save a year's worth of expenses. You can be more risky because you don't have all those responsibilities. But if you have kids, you have a spouse, you have other financial responsibilities, maybe you don't want to be as risky. Maybe you want to be a little bit more safe. Now you can put a little bit more money aside, but this is really going to depend on your own personal lifestyle and your own personal risk tolerance. Once you do that, the second thing that you want to do is you want to start leading your money. And this is where you're creating a plan for your money, like what I was saying with the 75, 15, 10 plan, where now you're putting money aside to save, invest, and spend. And where do you invest your money? Well, it can be stocks through a passive investment or an active investment. It could be through real estate. You can invest in your own business. You can invest in paying down your debt if that's something that you're interested in. You can invest in startups. You can invest in potentially cryptocurrency. But you got to understand the investments. That's where the financial education comes into play. The next is where now understanding debt. One of the places you can invest your money is paying down debt. And that is going to depend on now your risk tolerance and your lifestyle choices. If you want to fly in a private jet, you want to have all the nice stuff, you want to live big, and you're trying to debate whether you should pay down your mortgage or invest your money in your business, well, if you're trying to get it all, you got to take more risk and understand that it comes with more risk. You got more potential upside, but it comes with more risk. But if you're just saying, I want to just be financially free and never have to worry about money again and not stress about money, then you can consider paying down your debt. Because now, once you pay down your debt, your expenses are much less and you can live much freer because you have less headaches. I mean, every piece of debt is a piece of headache. And understanding what type of lifestyle you want and understanding then how do you manage your debt. And then also not going deeper into debt, not going into the 0% APR financing, even though you feel like you're getting money for free. If you were getting money for free, the 0% APR companies wouldn't be making any money. Buy now, pay later companies wouldn't be making any money, but they're making billions and billions of dollars. So somebody is paying, and it's not them, it's you who thinks that you're getting a steal. The most expensive kind of money is free money, and you will save much more money in the long term by paying for things in full upfront, especially your liabilities, things that don't make any money, paying them in full upfront that we don't have to worry about the cost later on. Then the next thing you want to do is work on increasing your income because now you have a financial system in place. You know how to save your money, you know how to invest your money, you also know how to spend your money. Now is when it pays to increase your income because now you can just grow your entire funnel quicker. And this is the things that I just talked about increasing your income. The last step is now protecting your assets, literally, where when people realize you have money, some people are going to try to take their hands, put it in your pocket, and take some for them too. So this could be now using insurance as a protectionary shield, getting a proper tax advisor, an accountant, so you don't overpay on taxes, getting an attorney with estate planning, developing a will, building a trust, having the proper estate planning in place to protect you and your finances, using legal shields like an entity, an LLC, if you're creating a business, and knowing how to protect your investments. So now this is where you're really working to protect yourself against bad things, but also giving back. Because now as you work your way to wealth, the more you have, the more you can give. And this is where now you have a bigger opportunity to help other people, whether it's through money, your time, your knowledge, that you can give back and help other people because information is meant to be spread. Education is meant to be spread. And the more you know, the more you can help.
I love that process, and I think people are going to enjoy like listening to that and hopefully implementing that into their daily lives. I think one of the things that people struggle with when it comes to money is habits and behavior. They make decisions, impulsively. They buy things because it feels good in the moment. Like, what tips do you have for somebody to help unlearn some of these poor spending habits that they have and to be able to create new healthy ones?
Well, a simple rule of thumb is to try something like a 24-hour rule, where you're walking through a mall, you see something you like, and then you're about to buy it, but then just pause. Take 24 hours to sleep on it and think if you still want to buy it. If after 24 hours you say, oh man, maybe I don't want the sweater, maybe I don't need it, I wouldn't actually wear it, then don't buy it. But if after 24 hours you're like, I really still want that sweater, then you can consider buying it, assuming you can afford it, right? We talked about the affordability aspect already. So you got to actually afford it. But now, if you actually need it, give yourself just 24 hours to think about it. And this is where you're really just differentiating wants versus needs. And many times we try to sell ourselves on the idea that what we want is what we need. But, depending on what stage you are in your life, what you need might be a lot smaller than what you want. And that it's just a matter of understanding that. Like, I remember I was in law school, or maybe it was a little bit before law school, but I was making good money, something around six figures now a year, about $100,000 or so a year. I was a student, and this is from my business, and I had already made a ton of dumb purchases. And I started learning about investing, and I was like, I don't want to do this again. So I stopped spending money, and I went on the completely opposite extreme. Because when I started making a little bit of money, I was spending a lot of money. Now, when I started making more money, I was spending no money. And I would like run my clothes and my shoes into the ground. I mean, I got to the point where I had these shoes with holes in them, and my shoe would like flap because the bottom sole was not connected to the other part of my shoe. So I took masking tape and I literally wrapped it up And I wore those shoes for a long time, just walking around, walking to class with that. I looked like I was broke, but I was trying to invest every penny that I was making back into myself. And I'm not saying you got to be that crazy or that extreme, but it's just understanding that what do you need versus what you want, and being able to differentiate that before you spend your money. Because one of the easiest ways to have more money is just not spend it. And maybe it's not the easiest, but it is the most accessible, because for some of us it is hard to stop spending money. But in the beginning, for me, it became a game, because once I learned the power of financial education, I really wanted to make up for all the dumb purchases that I made, and I wanted to start building my wealth, because that was something that I really wanted.
Practicing the pause is so important. I want to go back into investing. Like you talked about stocks, you talked about real estate, you talked about potentially crypto. Like just for the average person listening to this that maybe they're on their way to building wealth. How does somebody know like where they should put their money so that they can, get the best return possible for whatever it is that they're investing?
So let me start by saying where I invest my money, and then talk about the different opportunities there are, because I invest my money in five places. Number one, and this is in order of where the most money goes. Number one is my own company, briefs.co, and that would also be startups that I invest in. Number two would be physical real estate. Number three would be stocks. Fourth, crypto. And fifth is physical gold. That's where I invest my money. Now, you don't need to go out and invest in all of these things at one time. You start with one. And the one that you invest in is going to be dependent on your interest and what you want to and are capable of investing in. Like 10 years ago, if you wanted to invest in real estate, you couldn't do that with $100, or it would be extremely difficult. Today, you can get exposure to real estate with online crowdfunding sites with as little as $100, sometimes even $10. And this means you get essentially or very close to equity in a deal. You just put your money into a fund and you get exposure to a bigger piece of real estate or a whole portfolio of real estate. This didn't exist a decade ago. This is a very new field. So now you can invest in real estate with very little money and not have to worry about all the headache of managing a property. If you have more cash and you want to get exposure to real estate, then you can invest in real estate. If you don't want to deal with real estate, then you can invest in stocks. And the nice thing about the stock market is, thanks to apps nowadays, which didn't exist 10 years ago, you can invest in stocks with as little as $1. Literally. So there's no excuse not to start investing. The question is where. And this then becomes, how involved do you want to be? Because if you are like me and you're like, man, I love finance, I love this idea of financial education, and I want to be involved with my money, then you want to be a little bit more actively involved, where you're looking for good opportunities, you're researching investments, and you're looking for the best opportunity. And that opportunity is going to change with time. Like 10 years ago, I was 100% in real estate, because that was when we were at the bottom of the 2008 crash. So I was only buying real estate. Then over the years, I started buying more stocks. Then when crypto crashed, I bought crypto. And I also invest in startups. So I mean, it's opportunities are always changing, and this goes back to that financial education and preparedness, where you don't want to just say I'm only going to be a stock market investor or only going to be a real estate investor, unless you want to be a specialist in that investment field. Like if you want to be a full-time real estate investor and a full-time real estate developer, then by all means go ahead and do that. But if you're running a business or if you have a job and you don't want to be a specialist in one thing, then it's just looking where the opportunities are and finding that opportunity now. And if you don't want to invest that much time and effort into it, then just be a passive investor. And that means you can create an account with a passive stock market investing brokerage and create a system where you're investing into a portfolio of ETFs or index funds, which are just groups of companies. And every time you get paid or every week, money leaves your account and is automatically invested into these funds, and you never touch it. Whether the market's up or down, you just keep investing your money. And now you're getting exposure to the investments. You're building equity, and you don't got to worry about spending all the time in it.
I want to double down on the stock market because I think that most people, I would say, when they're just getting started in investing and they don't want to, spend a lot of time on it, that's like their idea is they want to maybe open an account, they want to invest in some ETFs, perhaps some mutual funds, and as that grows, maybe they can move into like individual stocks. But like, what are a few things that somebody should look for when they're looking to open an investment portfolio and begin to invest in something like an ETF or perhaps something like a mutual fund?
Well, the first thing I would say is look at the fund that you're investing in, what exposure you're getting, And especially if you're just getting started, start broader. So, there are things like ETFs that give you exposure to tech companies. There's ETFs that give you exposure to the general stock market. There's ETFs that give you exposure to the S&P 500. In the beginning, maybe start a little bit broader, that we're not picking like a super, super niched ETF if you don't understand the industry. Then to dig a little bit deeper, the thing that you want to pay attention to, especially if you're investing in funds, is something called the expense ratio. The expense ratio is what are the fees of investing in this ETF or mutual fund or index fund. And generally, this doesn't apply all the time, but I would say 80% of the time, a low cost, low fee ETF or index fund is going to save you more money over the long term. Many times those fees are going to eat away at your profits, even if it doesn't seem that much, like a 1% fee might not seem that high, but it's going to cost you a huge chunk of your portfolio over the long term. And that's where you want to just be cognizant over what the fees are. And then third would be your investment strategy, meaning how often are you going to invest? And you really don't, if you're a passive investor like this, you don't want to be adjusting your strategy based off of what's happening in the markets. The only thing you really want to change is maybe you buy more when things are down. That is not the time to sell. And I know it's scary. Like when the 2020 pandemic happened, it was sad, but so many people started selling out of their 401ks at the bottom of the 2020 crash. And these are long-term investments, people who have decades ahead in their career, and you're selling out of these long-term investments which are supposed to be there and not be sold, and you're just selling out. You're trading your long-term investments, and it completely defeats the strategy. And when you try to undercut the strategy, it will undercut the profits that you can make. And we saw the same thing happen in 2008. And this is where understanding what your strategy is and stick to that strategy is so important.
I want to talk about like the end game, because you touched on that the old adage of just working and investing to a place of where you retire is essentially, it's not necessarily practical. Like what can somebody use then as a new goal? Like how could somebody come up with like how much money they need to have before they can dial it back a little bit in their career and start to like branch out to live a more fulfilling life like after they decide to like move on from that career?
So I think there's two questions that you asked there. One is, how much money do I need? And second is, what do I do to fulfill my purpose? On the financial aspect, this is gonna, the simplest thing to do is see how much money you need and then work backwards. Start with the end. And most of the time people just throw out a random number. Oh, I want $1 million, $10 million, $100 million. Why? And this is where you want to be able to calculate it, especially if you're working towards that traditional retirement. Now, I'm not a huge fan of retirement. I'll get to that in just a second. But if you're working towards that traditional retirement, then the first thing you need to know is how much money you need. And the way you calculate that is by looking at what are your monthly costs, take that number, multiply by 12. So if your monthly costs are $5,000, multiply that by 12, you need 60 grand a year. How are you going to generate 60 grand a year? Well, take that number, divide it by 0.04, and take the number and divide it by 0.07. That's going to give you a range of how much money you're going to need in order to retire. Now, I did this math a little while ago, and I don't want to say the wrong numbers, but I think that's somewhere between $857,000 and $1.5 million. That gives you an idea of how much dollars you're going to need in order to be able to retire and live financially free. Now, the nice thing is you don't have to actually accumulate that much money. You don't have to accumulate 857,000 or 1.5 million, because the goal is for you to put aside cash every month and invest it, because then your investments will grow and they will attract you more money. So it's not just you working to put that money aside, it's your money that you put aside that's working to bring you more money. And if you make 60 grand a year, which is what your expenses were in this example, and you're putting aside 15% of that, which is $9,000 a month, and you can get a 7 to 10% return on your money, which is what the average historical stock market return was, you're going to have more than enough money after 30 years to be able to live your life without worrying about money. And so that's the first thing you got to do, those type of calculations financially to know how much money you need. The second question is that what you want to do? Like, what is your purpose? Because for me, these calculations don't do anything for me because I hate the idea of a traditional retirement. I don't want to stop working. I love what I do. I want to work until I die. Like if somebody asked me, Jaspreet, what could you do? What would you want to do if you could do anything? It would be this. Like I love this idea of education. I love running briefs, media. this is something that I really like. I started this as a hobby. I started Minority Mindset as a hobby, not with the goal of making money. I did this because I really liked entrepreneurship and financial education, and it was a way for me to talk about it and ramble about it without annoying my friends. And now I get paid to do that, which is really cool. I mean, I'm very fortunate and very blessed to be able to do that. And it is. I'm very lucky to do that. But you don't have to go out and start a YouTube channel and have a million followers. But there are things that you can start doing now to help you start doing things more related to your purpose. I call this more lifestyle design, where you're building a lifestyle that you don't need to escape from. And nowadays, with many people working hybrid works, it's much easier, much more accessible to do this. But figuring out, what is it that you want to do? Do you like gardening? Do you like fitness? Do you like finance? Do you like music? And start doing something within it. Start creating something for yourself. What is it that you like to do? What type of thing could you talk about forever and not get bored? And do something around it. Now, you don't have to make money, but you start to design a lifestyle where you're doing something you enjoy, and hopefully one day you could monetize it. And then as you get closer and closer to retirement age, well, then you can start doing more and more of the thing that you want to do. That way, when you're traveling, when you're doing whatever you want, you can still make money and you're doing what you love. And this is where it's a matter of thinking ahead, because when people talk about retirement planning, all they're talking about is how much money you need to not die and not run out of food. But what about everything else, like your purpose, your enjoyment, your fulfillment, and that type of planning we never talk about. But those are the things that you want to start planning in advance. You don't need 4 decades to build it, thankfully. But the earlier you start, the more you're going to learn and the more you're going to enjoy it. And maybe it'll allow you to quit your job even earlier because you're making enough money to do that.
So it seems like you're just suggesting that, you're more for like the hybrid model in that you do want to continue to work and do what you love. However, you also want to have a plan to make sure that you have the money to not only support that, but to also support you being able to travel and, do certain things that allow you to step away from work and have fun and be fulfilled on that side of things, correct?
Yeah, I mean, I think everybody wants to have a purpose. So it's working towards that, but you got to be able to afford the life that you want. And that's the financial aspect. If your purpose can finance it for you, great. If it can't, well, that's where you got to at least have that financial planning in place. That way you can afford to do whatever it is that you want.
Right. And so I think as far as expenses, I think a lot of people they struggle with just spending money on things they don't need. I know you talked about earlier in our conversation, like having a piece of paper and almost like making a list of all the stuff that people are spending money on. You talked about practicing the pause and not buying things that they don't need. But as far as like a few things that you see that are super common that people just maybe aren't paying attention to that they're spending their money on like every single month that is draining their bank accounts, what are those few things that can easily be eliminated so that people can have more money in their bank accounts?
The biggest one is probably your car. I mean, I think I forgot what it was. The average car payment in America is over $600 a month right now. I forgot the exact number, but people are spending so much money on their car. And if you got to finance your car, you're overpaying for it. Because if you got to finance your car, that means one, you can't afford the car. You couldn't afford to buy it. And second, you're paying interest to pay for something that's losing value. Now, are there any exceptions to financing or leasing? Well, leasing, I would say, is more of a luxury. It's like flying first class or flying private. Financially, it doesn't make any sense, but you're getting an additional value, which if you can afford it, go ahead. Financing does have some, I guess, wiggle room if you have a business and if there's a tax purpose for you to finance. But if you're just financing a car because you can't afford it, you are overpaying. So the first thing you want to do is get rid of that car, sell it, buy something that you can afford with cash. There are a lot of good working condition cars. They might not be as sexy as the car that you have right now, but there are some good working cars that you can get for under 10 grand, even under 8 grand, that will take you from where you got to go to where you got to go safely, reliably. It's just not going to look as good, but it's going to save you a whole lot more money. And now what you do is you take that $500 or $600 a month that you were putting towards your Beamer, and you put that towards your actual wealth. You put that towards your investments. Because if you have all that fancy, nice stuff right now, but you don't got an investment portfolio, you don't got any stocks, you don't got any real estate, well, your priorities are in the wrong place. And I think the easiest place for people to start is their car. You can look at your home. And then it's just your clothes. I mean, all the other liabilities you have, just look around you. Where are you spending money on things that you don't need? And start cutting some of those out. But again, the goal isn't to live like you're broke forever. The goal is to start learning how to live below your means. That way, now when you start earning more money, your more money is going to have the most impact because you know how to use your money.
Amen to that. And I think you're right. Like car payments, people spend so much money on their cars and they finance cars that they don't even really like. They're just buying them to impress like somebody that lives next door to them or impress somebody in their family or whatever. Like, do you ever think though there's a time and a place where somebody is just living paycheck to paycheck and they're busting their butt to pay off some debt and save a little bit of money, but they need a car like to get to work, that they should maybe consider taking a loan to get a car that's like somewhat affordable?
Look, my car right now, today, that I drove to the office, it's worth about 500 bucks.
Wow.
My employees got better cars than I do. You got to make that decision of what you really want. Can you get by with a $700 beater? Yes or no? And if no, then everyone, you got to have a car. I get it. But can you put aside $1,000 to get a car? And if you don't even have that much, then go finance a $2,000 car, if that's what it takes. But it's really just understanding, what do you really need. And a lot of people don't believe that I drive a $500 car right now, but I still do. And I got some personal reasons where I'm trying to grow the company to a certain point and show the team that, look, I'm investing everything that I can to grow the company right now. And I'm not putting that money out for myself. I'm trying to grow the brand. I'm trying to grow my team. I'm trying to grow my employees. I'm trying to grow my assets, before I grow my car. And that doesn't mean I don't spend any money. Like, I spend money on things that are more important to me. I spend more money on travel. I spend more money on other luxuries. But a car is not something that I'm blowing money on right now, because I'm trying to put that money back into the business and really grow that quicker.
I love it. I love it. So the last question I have for you is, I've heard you say that I think that like you don't believe like net worth is as important as, some people might think it is. Like, what is your take on net worth and why do you think it's overrated?
It's all crap, man. What does net worth show you? If you have $1 million in the stock market today, well, that $1 million could become $500,000 tomorrow if the stock market tanks. You know how many people there are that talk about, oh, I'm a millionaire because my home is worth $1 million. Well, if the housing market crashes, now how much are you worth? And the problem is, people start living a $1 million lifestyle based off of what they're worth on paper. They look at the stock market portfolio, they look at the value of their home and say, oh, I'm rich. And now you take out all this debt based on the value of your stock portfolio or your real estate without the income to support it. And then if the value of that asset goes down, now you're underwater. You were rich for a minute, but now you owe more than you're worth. And that's why I rather live a life based off of how much cash that I have, rather than how much I think I'm worth on paper.
Well said, man. Well, Jaspreet, this has been amazing. I think the listeners are going to get a lot of value out of your insights and out of this conversation. If people want to connect with you, they want to follow you on YouTube, they want to subscribe to your newsletter and that sort of thing, like where's the best place for them to do that?
You can follow me on YouTube, Minority Mindset, Instagram, YouTube, Minority Mindset. And if you'd like to join the newsletter, go to briefs.co. And we have a newsletter for investors called Market Briefs. And we have a newsletter for business owners and entrepreneurs called Business Briefs. Both of them are completely free.
Amazing.